Hello, everyone, and welcome into crushthestreet.com. I got a very exciting interview for everyone today, timely at that. I got to appreciate Kyle Heineman for setting this up for us. He's with Veteran Blockchain Investment, and he connected us, Paul Snow of Factom. And, Paul Snow is now a returning guest here at Crush the Street. He was very timely when we interviewed him last time in 2017 during the historic bull market, one of the most level-headed, smart individuals, somebody who's an entrepreneur, a thought leader, and understands all the technical aspects of it. He even has gone on and co-founded and founded, actually, Factom, a data storage, encryption, crypto asset, and something that's really revolutionizing the world. And here we are in 2019. Of course, if we look at Bitcoin at $3,600, we're way off of the high, the benchmark. People don't want to hear about crypto right now. They're worried if it's even going to be around in the near future here, but I think it's an important time to be discussing it. And we got, one of the greatest thought leaders on the line with us today. He's headed up the Texas Bitcoin Conference, and he's very well respected in the community. So, Paul Snow, thanks for coming on Crush the Street with me today.
Well, I want to tell you it's great to be on Crush the Street, and thanks for having me back.
Well, you're always welcome here. If you would, let's remind everybody, how you got into cryptocurrency. How did you get introduced to it, and what made you so passionate to actually go off and build a business, another cryptocurrency that's involved with blockchain that's changing the world?
Well, I was enthralled with the idea. I moved into the space slowly. I started watching in 2010, started buying my first Bitcoin in 2011, and really got focused on cryptocurrency at the end of 2012 and coming into 2013. The idea of having a monetary system that is fair and impossible to play the same sort of games with that we play with dollars was just very, very interesting to me. And I started some meetups, and I started talking to people in the space, got interested in conferences, started the conference in 2014. And there was an investor by the name of David Johnston that said that he would really like to see a platform for distributed autonomous applications, basically applications that are provably fair, have provable audit trails of their processes, create identities for parties that are interacting. And I started looking at the idea of software registration. He threw some money at me to spend some time spitballing the, how I can use the blockchain to solve a real and identifiable problem of knowing exactly where your software came from and with cryptographic proof that it hadn't been modified before you installed it. And when I started looking at that, I realized that the key problem was identity. And when I started looking at how I could create identities for the authors of software, for the software products, for each of the versions, I realized I needed something like Factom. And so that's what drove me into building Factom. It's basically the system in order to use the blockchain to solve real-world enterprise problems.
So this is interesting. You're one of the smartest people I know in the space, which makes sense as to why you were able to do what you've done. So let's backtrack a little bit. What's going on with blockchain? Using Bitcoin as like the benchmark. We've seen such a hype go on in 2017 with the price. And 2018 happened, and people, kept saying correction, correction, correction. And one of the things that I told people here is bear markets are brutal. They wash, they rinse investors, and more bad news comes out, which perpetuates bad news. People lose money, so they have to sell. It's just a bear markets environment are rough. And if you look at what happened in precious metals, you would know that. You could apply what happened there, year after year after year, just watching it go down from 2011 when, in theory, we should be at $20,000 an ounce gold. Fundamentals seem to always defy price in so many cases. So can you talk a little bit about the price and what we're seeing right now, this environment? Are you optimistic? Are you worried that people are going to bypass this technology and say, we don't need it? What are your thoughts on this?
Well, I believe that the risk that they're going to bypass this technology with a conclusion we don't need it is near zero. I can't say it's actually zero. I'm an engineer. I can't claim to predict the future. But the main thing that a blockchain does, and particularly a public blockchain, is it provides a system of record for processes where you don't have to have a party that owns the system of record. So if you take something like your citizenship exists in the government system of record. It doesn't, and if the government goes into their system of record and inadvertently deletes your entry, you're now not a citizen, and your only recourse is to go to the government and say, give me my citizenship back. That was a mistake, right? And every company working with other companies faces the problem today using traditional technology of arguing who is going to hold the system of record for their processes. And that is a very, very big problem. And so what you end up doing is you end up creating manual processes where you could have done a really, really efficient job of running your process in a system of record that managed the automation, but you can't decide who owns the system of record. The blockchain lets you avoid that problem. And so it's here to stay. And it is a massive technology. And I like to look at it this way. When you talk to the non-technologists in the market, or you listen to the non-technologists in the market, like Buffett, you're going to hear that the blockchain and Bitcoin is rat poison. When you talk to you listen to the technologists like Bill Gates, you're going to hear him say, this is an incredible thing. It's hard for the market to price right now. And that leads to this, euphoria followed by, oh no, it's not being adopted fast enough, and the drop. And we're going to come to another euphoria moment. And I suspect if we went up from 1,000 to 20,000 between 2018 and 2013, at the very end of 2013, beginning of 2014, if that 1,000 went to 20,000 in those 5 years, I kind of expect the same sort of order of magnitude in another 5 years. What is harder to predict is where the valleys and the peaks are going to be between those kind of milestones.
Yeah. So, and people should notice that bear markets, bull markets, they're never exactly the same. You can't expect what happened in 2017 to happen again on some exact logarithmic scale, although Bitcoin and cryptocurrencies seem to do exactly just that. But I just want to put it out there. You can't always expect things to happen the way you're assuming, because markets just, again, have a way of washing and rinsing investors. But that doesn't mean you can't be smart. And if you believe in it, take a position in. One thing I thought was interesting, and I liked how you did there. You took a negative Warren Buffett huge authority in the space and juxtaposed it to a positive opinion with someone with equal authority in the technology space. So, and I tend to be leaning more towards Bill Gates in the sense of my opinion on that. I'll leave you with this question before I pass it back to you, and that is, people have discussed the whales in the space having so much of the market, and them being able to take Bitcoin, for instance, down to $400 if they want to, because they own it at such low levels. What are your thoughts on this? Is it possible? Is it probable? Do you see this as something that is getting a lot of attention right here from investors in the space moving in to cryptocurrencies?
I think that all investors that go to markets should be aware that there's always the ability of those that have to manipulate the price. You and I know that LIBOR happened. We know that the credit default swap price manipulation happened. Those price manipulations involved collectively between the two over $800 trillion. That is so much massively larger than the GDP of the entire world that you would think that's way too big for anyone to be able to manipulate a market. And yet they were. So I would caution all investors at all times to always consider that market manipulation is a reality. And when people look at the crypto market and they say, oh my gosh, we need more regulation to stop this market manipulation, give it up, because all you're really doing is choosing who is your manipulator. You're not going to get away from market manipulation. All of that said, Bitcoin has an advantage over most assets in that they have a ledger that is public and immutable, so you can look at the token allocations at least by address. And there is a huge amount of information that can be derived by blockchain analysis. And I believe that as the space grows and as the space matures, it is going to be harder for parties to manipulate markets, but it'll never be impossible. I don't think, and let me go back, you mentioned precious metals. Most of us who have watched the precious metal market have been concerned about market manipulation, and many of us can point to events that have occurred in the market where gold was dumped outside of the trading hours in order to drive the price down at the opening bell, and these kinds of maneuvers just are so effective at moving prices in the markets, right? So one of the big advantages with the crypto market is the market never closes. So some of those kinds of manipulations are a little harder. It's international, so that makes it a little harder because that means that there's somebody awake watching all the time. And the last thing that makes it a little harder is the fact that since it's a hard asset that can be traded on multiple exchanges against that common ledger, you have a harder time manipulating a particular exchange the way sometimes other assets get traded. Anyway, I don't know if I answered your question really, but you start me off on market manipulation and I get really, really hot under the collar because it is a problem, but I just don't know what the solution is.
Yeah, no, and you definitely were able to address some of these things. Let me ask it in a different way because I appreciated your answer, and I'm just looking to facilitate this conversation here. What about the risk of it going down because there's so many people who hold so much of it and it's all, in a sense, centralized? Not that the crypto is centralized, but the control of it is centralized. Do you have
Right.
any concern that there might be a massive dump because of that?
Well, not too much, because what all the parties are trying to do that hold a lot of Bitcoin is enhance the value of their portfolio. And so there is a certain amount of short-term price manipulation that they do in order to raise their share of the blockchain space, whether that's Bitcoin or Ethereum or whatever. They really have no incentive of destroying their portfolio. So the idea that there are Bitcoin whales that will drive Bitcoin down to 400 feels very, very unlikely because of the massive impact on their own holdings of, the whales on their holdings to drive it that low. Now, keeping it at 3,000 and because they're accumulating at this level, because they're waiting and forcing people to sell and they're buying, that little zigzag pattern we've been seeing after the hill, right? If you can visualize the current Bitcoin chart, that looks like some price suppression in order to accumulate. To me, that's the sort of thing that I see in the charts and I find suspicious.
Sure. Well, and the good news is I feel like the whales are very bullish long term. They actually believe in it. If it was something that was a complete scam, sure, they would dump it and run away from it. But if they believe in it, which I think a lot of us do, and I lean on guys like yourself who really understand the underlying technology, that say, hey, this is a real viable technology that is serving a very good purpose when it comes to money. And obviously Factom is an interesting project that you guys were able to start and you founded. And so I'd like to touch on this, if you would. Talk about the emerging technologies that have shot off from this decentralized ledger. And I mean, especially hit on what you focus on with data storage and encryption and who's using it and, where do you expect this to be in 5 years?
Oh, okay. Well, all right. That's a very broad topic. But let me lay out some things that have broken off of Bitcoin. Bitcoin itself has grown in value and attractiveness to parties to hold, to the point that it's acting more as a reserve than necessarily a medium of exchange. And that has prompted parties like Bitcoin Cash and Litecoin and a bunch of other crypto that are focusing on the ability to buy and sell goods with their tokens and their blockchains. In the last couple years, one of the big moves and the big technologies is to create stablecoins in the crypto space, tokens that trade like Bitcoin but are tied to real-world assets like USD or euros or yen or whatever. And the idea in a lot of these systems is to have a mechanism to make money that, that's incentives. That's the right term. Incentives to bring parties in to hold tokens, to participate in smart contracts and that sort of thing, in order to support a separate token that stays stable at the dollar price. They look a lot like derivatives. They look a lot like futures contracts. There's a big mix in the space, and that's aiming at transactions with cryptocurrency. Bitcoin also, with the immutable ledger, inspired people like me to create systems that create a data integrity layer that can be used by parties to ensure that their own private databases contain the right data that matches cryptographically provably with the data that their other partners are collecting and using and looking at. and ensure that you have basically an audit trail of how that business process worked. So this is like supply chain, making sure that the lettuce that is grown organically is the lettuce that you actually have in the retail market when you buy it in the grocery. There was a very, very interesting paper here recently that showed that when they did genetic testing off of the fishing boats, 17% of the fish were mislabeled. They were, you know, they were said to be redfish, but they really weren't redfish. They were something else, right? So a 17% error in labeling seafood off the boat. When they went to the wholesale market, they found about a 25%, 24% difference. In other words, mislabeling increased. And by the time you went and did the genetic testing in retail, it was over 34% error. Okay, this is a problem of provenance of what the labeling was done by the fishermen, which might have very well been just a mistake, but 17% sounds like they know they can pass off certain fish as a higher priced commodity. The wholesalers are getting losses, perhaps, and they're filling in with something they know they can get away with, and something else is happening somewhere else down the line. The bottom line is the blockchain can solve these problems. And the last thing that Bitcoin did is it had a scripting language, and the scripting language allowed you to not just transfer money to somebody, but put conditions on it. And this has become known as smart contracts. And Ethereum, of course, ran wild with that. And Ethereum is supporting smart contracts. Cardano is supporting them. EOS, so many different platforms. Rootstock. Many platforms now are doing the smart contracts at a higher scale, all inspired by Bitcoin. And honestly, when I go through the blockchain space and I look at every use case and every project out there, they arguably all find their roots in Bitcoin.
That's interesting. And so I'm curious about the data storage, the encryption, the example you gave. What is, let's say, the need? You mentioned the 25% error on the wholesale side for the fish. Now, is that an issue with just a human error, you know, misplacing it? How will like Factom, let's say, be able to make that, you know, a 99% success rate versus, you know, a 75% success rate? You know, is it possible that somebody is, you know, going to mess up, you know, inputting it into the ledger the right way? You know what I mean?
Well, I think that one of the things you want to do is you want to, as close as possible to the source, create a audit trail of where the fish is coming from and how it is labeled. And what Factom allows you to do is literally create a chain, a blockchain. It exists as an entity within the Factom ecosystem, but create a chain for that fish, for that harvest of fish, labeling all of the components. When those fish are sold, that chain can track that fish all the way from the boat all the way to the market. And if you find a difference in the fish in the market, you can go back through the chain and find the party that mislabeled fish or changed the packaging or everything else, or any other kind of error. Human error is possible because we're just not actually tracking the fish correctly. And by the way, I'm no expert on this problem. I read an article pointing out that there was a supply chain problem with fish. How fish are handled, how they're packaged, what are the odds of actual human error versus what are the odds that somebody is seeing some spoilage and repairing the channel with lower priced fish. All of that I don't really have insight to. But when you use a combination of Internet of Things devices that track produce and track food products through the channels, along with an audit trail that everybody is digitally signing and becoming responsible for their part in it, you've created responsibility and you've created a way to find problems and fix them.
Paul, you were one of the most level-headed people, especially during the crypto bull market, you know, October, November, December of 2017. I remember, you know, in person asking you, what do you think about this? And then obviously, of course, on our interview, and you were just very calm about everything. You know, let's see what happens. I mean, not so overly on the hype, but here we are, you know, after a big 80% correction, more than 80% in terms of Bitcoin, and then everything else seemed to follow. Are you a buyer at these prices? What are your thoughts as we are now in 2019?
Well, I have to admit that I am not a savvy investor. What I am is an accumulator. So I never leave the buy column. I can say that I know a lot about a lot of the technologies that are out there, and I am very bullish on many of them. I am always in the buy column, to be really honest. I think that the whole cost averaging approach to buying into crypto is the right way to go. Set up a budget. Say you're going to invest $100 a month in crypto, and just every month buy $100 worth. You're going to buy some highs, but you're going to get a lot of crypto in the lows, and you can't guess the bottom and you can't guess the top. But I've done a bunch of spreadsheets in the past, and it's always convinced me that buying into the crypto market is a really good idea, at least as a percentage of somebody's investment plan. For me, it's much higher than most people would be comfortable with, but I'm very bullish in the technology.
Well, that's exciting. And again, I appreciate you coming on the show. Crypto has been very good to us here at Crush the Street. The people listening, we were fortunate to be taking a look at it prior to 2017, you know, years ago, and obviously investing in it. It's one of those things. I hope people are able to make smart decisions, because even in the rise, you know, people might not have made as much money as they wanted, and they bought in, you know, doubled down, tripled down, quadrupled down at the wrong time, where they knew about it at the right times. They invested at the right times, but maybe not enough. And again, it's the way the market is and the psychology of the market. When it was at 20,000 Bitcoin, we didn't know if it was going to 100,000. So exactly, it's one of those things where you have to be prudent. You can't be investing more than you're willing to lose, especially in something that's so early stage. You know, as we close out this interview here, Paul, talk about saturation, if you would. I mean, precious metals, for instance, has had the opportunity to be priced for thousands of years. It's worldwide. Everyone knows about it. It's, to a degree, it's saturated, you know, not accounting for all of the manipulation and not accounting for, you know, maybe falls of major currencies. But crypto, on the other hand, there's still so much adoption to be made. So if you would, maybe touch on that as we close out.
Sure. Let me also put a caution on some of my earlier statements as I talked about saturation. One of the cautions is look very, very closely at what any particular project is purporting to be doing. I'm a big believer in Bitcoin. I can tell you without a doubt that I'm not a big believer in every project out there. In fact, in the top 30 tokens, I probably like 5 of them, and maybe less. So there is a huge responsibility of the investor to look at the project, look at what they are doing, what is the real world adoption, how is this really going to play out in 5 to 10 years, and make sure that you're not just investing in a pump and dump, because the smaller the project, I pointed out that whales can manipulate, but the smaller the project, the more latitude a whale has to manipulate, and so be very, very cautious of that. Now, saturation, I believe that when we begin to see real adoption of these blockchain projects to solve real problems, you're going to begin to have what feels like a real saturation point. Take gold, for example. Gold has as its primary utility jewelry. Okay. Second, real close, is bars in holes in the ground. So we dig it up one place, we melt it into bars, and we put it in the ground somewhere else, like Fort Knox or someplace. Maybe. Some of us doubt whether there's any gold there, but not going there. The whole point is, gold has this utility of making us look pretty, making us feel connected to our history, because when we look in the historical record, we see gold has always been the sign that you're a king, the sign that you're nobility, the sign that you have wealth. It is the gold standard. That just means that's the best when you hear that phrase. And so it has attained that. Right now, Bitcoin and cryptocurrency has not attained this kind of visceral understanding of value and utility. So I think that we're not going to really have a saturation point where we really kind of understand to some sort of reasonable degree the role of cryptocurrency in investment and in technology for 5 to 10 years, maybe 20 years. But we are beginning to build in that direction. When you look around and you see all the technology companies are all looking at aspects of crypto, you know that this feels just like it did with fax machines, like VCRs, with video rentals, the internet, the smartphones. There's a point where there's just enough of the technologists that are convinced that this is the way to go, that it's going to find its niche in the technology stack that makes up modern life. And I believe it's going to be more significant than most even technologists believe.
Yeah. Well, that's powerful, everyone. Paul Snow of Factom. There you have it. I mean, this is going to be a very timely update, I think, for everybody. Here we are in February of 2019, looking at the cryptocurrency markets. So if people want to learn more about Factom, what you're doing, everything that's going on, please let them know where they can go and what they can expect to find.
Well, you can go to Factom.com to learn more about the company, Factom Inc. That's the company I run and the products and the services that we're building. The Factom protocol can be found at factomprotocol.org, and you will find 20 or 30 other companies that are building Factom-based infrastructure and Factom-based products and services. And you can go to the Factom subreddit, which is /r/Factom on Reddit. And the first post there has links to all kinds of documentation and resources in the Factom ecosystem.
All right, Paul. Well, I really appreciate your time here at Crush the Street. I hope we can do this another follow-up here, especially as things start to progress in the space, and and if there's any new major updates with Factom, I'd be happy to share the information here at Crush the Street. So thanks so much for coming on the show.
Thank you.